Hello everyone, you're welcome to Young Investors Network series on financial literacy, and today we are going to continue our analysis on the listed companies that we have in Ghana. Our previous videos focused on GOIL. Then we did other analysis. We did a lot of analysis on GOIL. Today we are going to honor our words, just like we said the other time that we will focus, or our subsequent videos will be on Total Ghana, and then we look at the listed companies as well. So as you can see, we have extracted the data for Total from 2000 and our focus is from 2014 to 2018 5-year period. We want to look at their performance for the past 5 years and see how they have fared, especially to shareholders of the company. Okay, so without wasting much time, let's look at what we have for you today. Today is going to be on the trend of their revenue and their growth rates, in addition to some statement of financial position variables from 2014 through to 2018, in addition to their growth rates. So let's go straight to the point. Okay, so we want to look at their revenue trend. So we look at the revenue, we look at the cost of sales, we look at the gross profit. So let's insert. We use recommended chart. Excel will give us a nice and a beautiful chart that we can use to do our analysis. So we have to showcase the data. We rename the data series over here. So series 1 will be our revenue. Yes, of course. Okay, then we have series 2, which will be our cost of sales, and the last series will be our gross profits. Okay, so we have gross profit over here. Good. So there we have it. So we delete, then rename it as trend of revenue in Ghana cedis. Okay, so let's look at how the company has fared. Alright, let's cut it to a blank sheet. Okay, a blank sheet, and then do a better analysis on that. So let's see. This has been the revenue trend for Total Ghana from 2014 to 2018. Well, we can see that in 2014 their revenue stood at, that is the net revenue, stood at 1.6 billion Ghana cedis, and in 2017 it stood at 3.7 or 2.3 billion Ghana cedis, with the lowest or the least amount being 2016, where revenue declined from 1.7 in 2015 to 1.6 billion in 2016. So this has been the revenue trend, and this revenue comes from the goods the goods and services that they sell to their customers, which is solely or mainly oil products, fuel, petrol, diesel, and all that you can think of. Since it's an oil and gas company, we all know what they are into. Now, looking at the cost of sales, which represent the materials or the costs that they incurred in raising the revenues. Okay, so it encompasses the direct material costs, the direct labor costs, and then the direct expenses, and these become part of the final product. Okay, so we normally charge them against the revenue that the company has generated. So if you look at the revenue, the cost of sales trend from 1.5 billion as against the revenue of 1.6 billion in 2014, we can see that it has also been appreciating from 1.5 billion in 2014 to 2.1 billion in 2018, with the least amount being 2016, where it declined from 1.6 billion in 2015 to 1.5 billion in 2016. So we can see that as the revenue is increasing, the cost of sales is also increasing, because that is the main ingredient which helps you to be able to raise the revenue. Now, looking at the gross profit, which is the amount that the company has left, of which they must charge their indirect expenses, that is selling and distribution and administrative expenses. They must also charge their finance costs. They must also charge their taxes on this amount. So in 2014, realize that the gross profit stood at 117 or 117 million Ghana cedis, as compared to 219 million Ghana cedis in 2018. So we can say that within this 5-year period, Total Ghana has added about 100 million Ghana cedis to its gross profit, from 117 to 219 million Ghana cedis. So this has been the revenue trend for Total Ghana. Now let's look at how they have been growing this revenue from 2014 to 2018. Well, we have already extracted the growth rates. I would want to clear them up so that we will do our own growth rate. So for the growth rate, we will need the current revenue, which is in 2014's revenue, and then we will need the 2013's revenue divided by that of the 2013's revenue. Then you multiply it by 100 or 100. So that is how the calculation is done for the revenue or for the growth rate. So we will drag it down here, okay, and take out those that we are so much interested in. Of course, we know where to find them. So let's go straight to the point by looking at the growth rates for 2000, and for the cost of sales we look at the gross profit. So let's go for a beautiful chart. This will make it clumsy. Let's go for the column. Okay, so we have to showcase the data here, and then we rename the data. So we have series 1 to be the revenue, we have series 2 to be the cost of sales, and then we have the last series being gross profit. Okay, so we rename it as the growth rate, the growth of revenue. Okay, so let's cut it to our sheets and then do the discussion. Okay, so this chart is also clumsy, so we change the design. Let's go for this. Okay, so this has been the revenue growth rates of Total Ghana from 2014 through to 2018. So for the revenue in 2014, realize that it increased by 23.89%, with the lowest or the least being 2016, where revenue declined rather instead of growing by 7.89%. Okay, and in 2017 and 2018, revenue increased by 11.88 and 28 or 28.27% respectively. Now looking at the revenue trend and that of the cost of sales, you realize that as revenue increases, the rate at which the revenue has been increasing is not so different from the rate at which the cost of sales has been increasing. So the cost of sales has been chasing the revenue throughout the periods that we have reviewed. Alright, so revenue cost of sales growth in 2014 stood at 24.55%, and in 2016 realized that it declined by 8.8%, just as when revenue was declining by 7.89%. Now in 2018 realized that the cost of sales also increased by 28.7%, just when revenue was increasing or increased by 28.27%. Now let's look at the cost of sales, the gross profit. It stood at 15.8% in 2014, that is the growth rate, and in 2016 it increased by just about 1.59%, and in 2018 it increased by 24.16%. So you realize that over the 5-year period, their gross profit hasn't been growing as much as you may expect it to be for an oil and gas company like Total Ghana. So this has been their growth rate. Now let's look at other elements that we will look at it. So we will look at the profit before interest and tax. you look at the profit before tax, then you look at the profit after tax. Very important element to be looked at. So let's bring them here. Exhibit the data labels, rename them. So we have series 1 to be the PBIT, that is profit before interest and tax, also known as earnings before interest and tax. Then we have series 2 to be PBT, that is profit before tax or earnings before tax. Then we have the last one, which is profit after tax or earnings after tax, also known as the net profit of the company. Okay, so we will rename it as the trend of profit in Ghana cedis. Okay, so let's cut it to our blank sheet and then do the discussion as well. So this has been the trend of the company's or Total Ghana's profit from 2014 to 2018. We can see that in 2014 their profit before interest and tax, that is after taking out your indirect expenses, or after they took out their indirect expense, that is selling and distribution expenses and all other indirect expenses that they needed to take out, what was out of the gross profit, what was left is what we are seeing here, of which they are yet to take out their income tax and then finance cost as well, that is interest expense or the interest that they are paying on loans that they have gone for to do their operation. So in 2014 you realize that their profit before interest and tax stood at 47.6 million Ghana cedis, as compared to 2018 where it stood at 82.8 million Ghana cedis. So we realize that over the 5-year period from 2014 to 2018, the company has doubled its profit before interest and tax from 48.6 through to 20 or 82.8%, 82.8 million, or they have added about 40 million Ghana cedis, or they've increased their profit before interest and tax by about 40 million Ghana cedis, with their lowest amount being 2016. Of course, we saw that the revenue declined in 2016. Now let's look at the profit before tax. The profit before tax represents the amount of profit attributable to the company or its shareholders after taking out their interest expense, or also known as the finance cost. Alright, so in 2014 their PBIT stood at 47.6 million Ghana cedis, and at that same period their profit before tax stood at 41 million Ghana cedis, or 41.8 million Ghana cedis, giving us an indication that the company paid about 6 million Ghana cedis in finance costs to the banks or any financial institution, wherever that the company borrowed from. And it has been on the increase from 41.8 million Ghana cedis, that's the profit before tax, from 2014 through to 67.9 million Ghana cedis in 2018. So over the years you realize that their PBIT has also been on the increase, but they've only added about 20 million Ghana cedis to their profit before tax. Now if you look at the differences between PBIT for 2015 and the PBT for 2015, you realize that there's a difference of 10 million Ghana cedis, giving an indication that the company paid about 10 million Ghana cedis in finance costs. And then in 2016, the differences between the PBIT and PBT is about 13 million Ghana cedis, giving an indication that the company paid finance costs of about 13 million Ghana cedis. And in 2017, it stood at about 20 million Ghana cedis. There's a difference of 20 million Ghana cedis, or 19 or 18 million Ghana cedis. And in 2018, it stood around 13-14 million Ghana cedis. Now let's look at the profit after tax, and there is the amount of profit that the company has at the end of the day which is going to be attributable to shareholders, okay, and of which they'll pay their dividend, they'll retain some to invest in profitable project. So in 2014, the profit after tax stood at 30 million Ghana cedis, or 30.9 million Ghana cedis. And in 2018, it stood at 50 million Ghana cedis. So over the 5-year period, you can see that the company has increased its profit after tax by about 20 million Ghana cedis, from 30 in 2014 to 50 in 2018. So this has been the trend of the company's profit. Now let's look at the growth rate, how they have been increasing this amount. So we have our PBIT, we have PBT, we have PAT as well. So let's look at how the company has grown its. So let's select this, okay, and then we have the chart. Let's rename it, select, okay. So we have the profits before interest and tax, then we have profit before tax, then the last series we have profit after tax. Okay, so let's rename it as the trend. Now this will be the growth of profits. So how the company has grown its, or has been growing its profits for the past 5 years. Okay, so we will have to change the charts. Okay, so there we have it. Let's change the design. Okay, or we can use a bar chart instead. Okay, not so good, not so good, not so good. Okay, so let's stick to this. So as we can see from the chart above, in 2014 the company's profit after tax declined by 13.29%. The same applies to the profit before tax, with profits before interest and tax increasing by just about 5.47%. That is for 2014. Now if you look at the PAT, that is profit after tax for 2014 through to 2018, you realize that it has been on the increase, with 2016 and 2017 being the year that caused a lot of damage to the company, where profit after tax declined by 15.34% and 5.44% between the years 2016 and 2017, with 2018 being increasing by, or profit after tax increasing by 39.15%. Now if you look at the profit before tax, it also declined in 2014 by 10.59%. And then in 2018 it has increased by 38.4%. That is very, very impressive. If you look at what happened in 2016 and 2017, with 2018 being their best year, they've been able to maximize their profit after tax, profit before interest and tax, and profit before tax, and profit before interest and then tax. Well, it must be noted that the profit before tax, the profit after tax is affected by the amount of tax that the company paid in the period that we have reviewed. Okay, so in 2014 their profit before tax declined by 10.56%, as against 2016 where it declined by 12.49%, and 2017 declining by 5.84%. So this has been the growth rate of the company's profits. Now let's look at the company's statement of financial position, how it has also fared. No, before that, let's look at the cash and cash equivalents. And this cash and cash equivalents here represents the cash flow amount of the company's cash and cash equivalent. All right, so let's insert the data here. We can also add, so we have cash and cash equivalent here. Let's add the growth rates to it. So we have the growth rate for cash and cash equivalent here. Okay, so there we have it. And then change, let's showcase the chart title, so we can make it, so we have cash and cash equivalent in Ghana cedis. Okay, let's change the chart to a combo and then make one. Good. So now let's see how it is going to be. Okay, so this has been the company's performance, or the trend of the company's cash and cash equivalent from 2014 through to 2018. And it must be noted that I have intentionally taken out the cash and cash equivalent which we see in their cash flow statement. So the cash flow statement represents how money is moving in and how money is moving out of the company. So in the end, or at the end of the year, this is how much the company has in their coffers. Okay, so we can see that the company has been operating with a negative cash. That is, they've been operating with overdrafts or loans throughout the period. Okay, so in 2014, is the amount of cash that the company had at the end of year was negative 38 million Ghana cedis, as compared to 2018, where they had 20 million Ghana cedis, with the highest being 50 million Ghana cedis and then 51 million Ghana cedis in 2017 and 2015. Now, if you look at the growth rate, because they are all negative, the growth rate does not really make sense in this case. If you look at 2014, it stood at 10,491.28%. That means 2013 was even higher than the figures that we are seeing here. And if you look at the years, the subsequent years, it has been negative, 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 negative. So it tells us that Total Ghana has been operating with bank overdraft or loans, all right, which explains the amount, or it explains how much finance cost that they've been paying. We've already looked at that. Now let's look at the company's balance sheet or statement of financial position. You look at their assets, that is total assets. You look at the total liabilities. We look at total equity. So this is the total equity, and then we have total liabilities. So let's insert our chart. Okay, so you go for this bar chart. You change it to a bar chart. Okay, good. Now let's showcase our data labels and then rename it. Okay, let's change the names, the series. We have the first one being total assets. We have the second one being total equity, and then we have the last one being total liabilities. Okay, so there we have it. Let's rename it as the trend. We have the trend of statement of financial position in Ghana cedis. Okay, so there we have it. So this represents the trend of the company's balance sheet, that is their assets, liabilities, and then equities or equity. So it looks like this chart is not really going to help us. Let's use our column chart. Okay, good. So there we have it. So this has been the trend of the company's statement of financial position from 2014 through to 2018. So over the 5-year period, we've realized that, or we can see that the company has added about 400 million Ghana cedis to its statement, to its total assets, with 2014 where they had total asset of 383.1 million Ghana cedis, or 383 million Ghana cedis, and in 2018 they had a total asset of 791 million Ghana cedis. So that's about 400 million Ghana cedis increment within the 4-year or within the 5-year period. Now if you look at the company's total equity, which belongs to shareholders of the company, that is the stated capital plus other reserves, you realize that the company has added about 100 million Ghana cedis to their equity, from 114.8 million Ghana cedis in 2014 through to 205.9 million Ghana cedis, or 206 million Ghana cedis. Alright, and in liabilities, realize that it has been increasing at a very higher rate. The company has added about 300 million Ghana cedis of liabilities from 2014 to 2018, from 268 million Ghana cedis to 585.8 million Ghana cedis. Okay, so this has been the trend of the company's statement of financial position. Now let's look at how the company has grown its statement of financial position from 2014 total assets, then we have total equity, then we have total liabilities. Okay, so deselect, let's go for 2014 total assets, we have total equity, and then the last one being total liability. So let's insert our chart. You go for this. Okay, so this has been how the company over the 5 years has been growing its statement of financial position, or assets, liabilities, and equity. So we have total equity here, then we have total liabilities. So total liabilities here. Okay, so we rename it as growth. We have growth of statement of financial, okay, so financial position. Okay, so we take this out. Come on. Okay, so we take it to our blank sheet here, and then see how we can. So let's change this design here and choose this, and then also change the chart. Let's use this, which is spacious enough. So for the 5-year period under review from 2014 to 2018, you realize that the company has been increasing its liabilities from 13.75 growth through to 19.5% growth, with the highest being 2017, where they increased it by 41.99%. And in total equity, we can see that it has been growing at a steady rate from 10.93% in 2014 through to 20.79% in 2018. And then we have total assets increasing at a steady rate as well, from 12.89% through to 19.83% in 2018, with the highest being 2017, where it increased by 32.28%, which you can say that is because of the higher increment in total liabilities in 2017. So this has been the trend of Total Ghana's financials from 2014 through to 2018. Our next analysis is going to be on ratios, where we use financial ratios to analyze a company's performance. Thank you for watching this video. Please like our page, share, comment, and if you have any suggestion or anything, don't hesitate. This has been Prosper Apanya of Young Investors Network. Thank you.